Tuesday, March 4th, market analysis, Stan Ehrlich, 9:47 California time, middle of the trading day. Well, we have some downside breakouts on this double top formation I've been talking about for weeks and weeks. So it looks like we are on our way down to the downside objectives, but this is a very fragile situation. Let me explain a little bit here. You've all heard buy the rumors, sell the news. My little interpretation of this is markets move on anticipation and reverse on realization. Now, buy the rumor, obviously you buy it, and sell the news, you get out when the news comes out. Only a long trade and an exit on a rally. My interpretation is markets move on anticipation, whether it's bullish or bearish. In the last few days, we've had the anticipation of the taxes being put on the imports from obviously Canada, Mexico, China, et cetera, tariffs. Now that last night at midnight, apparently, the tariffs have started to be enforced, or that's what we're told. We have the news and now the realization. So the market came down very sharply this morning, dropped well into new low ground, and in some cases had significant breakouts. And that means in the case of the E-mini, you can see here, this is a new low today since November 4th, and actually that's not right. New low since approximately the middle of September. That is a substantial amount of time, approximately half a year. Normally, that would be considered a downside breakout. Now, we have to stay here. We have to close below those previous lows for the last approximate 5-6 months. And we should see some follow through tomorrow, further weakness. But if the market comes back up and closes probably about where it is right now, if not a little bit higher, then we could end up with a false breakout or a washout, and what's also called running the stops, and end up with a rally. Now, the rally may not be very large or last very long. I said the same thing yesterday, and look what's happened. So it's a very critical situation. Now, we're oversold, again, pretty much across the board. And we are messing with various levels of support. Now, they have been broken, but again, you've got to stay below what was support in order to have an official breakout. And the day's not over by any means. If we start to rally substantially from about where we are now, then it would begin to look like a washout and a rally is about to happen. You do have oversold conditions. You do have some support depending upon the index you're looking at. And you do have the quote unquote news is out. Now we know there's supposed to be more tariffs in a week or two. I believe metals, steel, aluminum, that kind of stuff. So the anticipation is not necessarily over. I think maybe, and this is all psychological, most of the anticipation is over. So that implies the possibility of a rally. So I'm watching very carefully to see if I'm going to get some kind of a decent bounce here. There's a good possibility, but I cannot come to that conclusion at the moment because you're on the edge of the cliff and tilting over, and you got to get something to grab onto in order not to fall faster and harder in the next couple of days into the abyss. So that's where we are. Next chart is going to be, of course, the 1 minute. As you can see, the E-mini dropped off a little tiny, over an hour or two, double bottom. And that has already pretty much come true. So that's already happened. The rally, now, again, making new highs in the last hour or two before the close, especially if it's by quite a bit. If perchance these indexes were to close higher on the day or anywhere around actually unchanged, that would cause me to expect further bounce. But it ain't happening. We're making minor new lows right as we speak here. It's dropping down. So staying where we are or lower is going to begin to cement the concept of a downside breakout on a double top formation. I'm going to go back one more time to the E-mini chart. My downside objective, if this is starting the double top breakout, is 54.47. I'm going to call it 54.50, easier number to remember. And that is substantially lower than we are. And here we have, of course, these 2 or 3 highs, and that's the double top. And you start at the lowest low between the tops, and that's the breakout, which has happened this morning. 1 minute chart on the mini going to the S&P 500. As you would expect, about the same thing. Now, there is no gap to close. It came very close, but there's no gap to close. There's a little bit of an overlap here. It did break the lowest lows ever since November 4th, November 5th. Yeah, November 5th. And it needs to stay below my horizontal line here drawn across the lowest low on January 13th. A date and the low on that date that I've been mentioning for a couple of weeks now. It's come down all the way very quickly to those levels. So we either have a false breakout or if it slips some more, legitimate. And it may not be on all the indexes all in one day, although that is fairly common. You might have to wait a day or two for the other indexes to follow suit if we're going to head south even more. Okay, if you get a rally, I just don't trust a rally. I don't think this would be a major turnaround, and I do think we're in for some more problems on the downside, bounce or no bounce. Next is this S&P 500 1-minute chart, rallying a little bit. Okay, now QQQ bouncing nicely, but the Qs broke out yesterday below the January 13th lows and stayed there. And we did get more follow through today. So even if the QQQ gets up to a little higher than yesterday's closing price, it's going to be bumping against resistance. I just don't see it. Everything I look at here looks like it's going to go up a little bit for a short period of time, and I'm doubting whether that's going to happen or not. Even if it does, I'm expecting it to roll over again and make new lows to the trend. So it's very tough at this exact point in time and price as to which one's about to happen. I'd favor the downside, but I'm not sure about a bounce in the meantime. Again, the bounce may last only a few days, maybe less, maybe a week, and then lower. And we got the QQQ 1-minute data. Okay. NASDAQ has made new lows today ever since the lows, and it even got broken on September 19th of last year. Again, give or take about a half a year. Now, it bounced off of the low of the day so far and a little bit of a support area, not that great, not that big a deal. And we're bouncing okay. But again, same commentary, same stuff. 1-minute chart on the NASDAQ. I don't see anything here at this point that's going to push the prices higher by any amount, by any length of time. The YM has held a minor support area and is not quite to the January 13th lows, but getting there pretty quickly. So the YM has lately held up a bit better. It still has the double top. It still has a potential downside breakout, and it still has a minimum downside objective of about 38,336 if the double top works correctly. So bounce or no bounce, I see it coming down more. Next is the 1-minute chart on the YM. We're going to go to the Russell, which is a different animal. The Russell has challenged the lows in early August 5th of last year, and has gotten deeply into oversold territory. So I do expect to bounce very soon. We'll see what happens, but it's just a bounce. Now we've got this substantial amount of resistance, the red zone, which used to be support and didn't hold up very well at all, as an overhead resistance level. Well, we're going to see how that gets handled. But this is a very, very, very big long-term support level that we're swimming around in at the moment. So, and this goes back to 2021, actually even back to as far as a year or two earlier than that. The Russell 1-minute data. Okay, let's go to bonds, interest rate futures, precious metals, energies, and so on. So the bonds are a new high again today, continuing to reinforce the probability, likelihood, my opinion, that there's a 1.5-year double bottom formation. Now, I know the low that we have made just recently, January 14th, is not that close to the price levels that creates the first low on the double bottom, and that was October 23 of 23. So those are the two dates and prices that are, I believe, forming a double bottom. That's huge. The upside breakout doesn't even take effect until you get all the way up to 128 almost. And we're 118 and 21. Now, the upside objective, if this whole big double bottom formation does develop and work correctly, is 146. Okay. Enough said, and I've just been saying this now for weeks about interest rate futures. Notes are a much better example of a broad double bottom. The lows are only several ticks apart, but 1.5 years apart. So the prices are super similar, and that looks like a really good example of a potential giant double bottom. The upside breakout takes place way up here at 15, almost 116. And the upside objective, if this works out over the many months to come, probably at least during this year, if not going into next year. Upside objective on the 10-year notes is 124.5, give or take a little, of course. So bullish on interest rate futures on these indexes, interest rate indexes, for quite a long time if this double bottom pans out. But obviously, we're going to have downside corrections in the interim, and we are overbought right now. So a minor dip, then we'll see what happens. Crude, new lows, bounced off an old trend line right there, very nicely, near the high of the day, not quite reversing, but it gives me the impression it's trying to bottom out, and today's low could be very important. So I'm not ready to say that we're turning, but it's giving me the distinct impression that it's trying to do so. And we did get almost oversold. So watching for the beginning of a short-term rally. Next, same kind of comments on heating oil. Came down to about yesterday's low, which was at support right at the beginning of it, made a new low by just a couple of ticks, nothing significant, and bounced again. And we're now slightly higher on the day, basically unchanged. And we were extremely close to being oversold and at support. So I like the combination. I'm looking for a bounce at this point on heating oil and crude. What about natural gas? Well, hell, it's already bounced. It's in new high ground today in natural gas since the rally highs we had in March 3rd of 23, 2 years ago, almost exactly. So getting overbought again on this rally, having a new high in price, but not in the indicator, and right at the high of the resistance area, although it broke through it. You know what I've been saying about new highs for the trend, and you don't stay or close above the previous highs? That oftentimes leads to a downside move, or a downside technical correction in a bull trend. And I think we're just about to see that. Yep, looks like a real good combination for this. And we'll go to the gold, silver, platinum, and then copper. Gold's popping up a little bit. Neutral RSI. I don't get any help out of it. Didn't get oversold. All we did was bounce off of a minor previous high, and that was way back on October 30th of 24. And that low 2 days ago, last Friday, was right about that price level. Bounced yesterday, bouncing more today. I think we're going to challenge the high of the trend, 2973-ish, and probably make new highs. I got upside elbow room, it looks like. Next, silver. Pretty much the same story, but I have less to work with. Now, before I go any further on the upside story, this is a possible very large head and shoulder top, my favorite technical pattern. But we do have to continue to fiddle around in here, and not for very long, maybe a week or two at the most. And we've got to start to make new lows below 3130 ASAP in order to have this last shoulder high still in effect. And that's ahead of the formation back in October of 24. And the first shoulder was about May of 24. So this is a fairly big pattern, close to 1 year, about 10 months. So it's got to continue to go sideways to lower in general in the next few weeks, maybe a month and a half. And that doesn't necessarily jive very well with what I'm thinking on gold. And, well, we'll see. Platinum, oversold, banged into the bottom of the support area very accurately, closed on its lows, looked real bearish on Friday, and turned around on Monday. Oversold, support area, one of my favorites. Bounced. It's getting a little bit more of a bounce today, right now about a tick lower at the moment. I like what I see. I think it's going to rally some more. Can't get a really great handle on this. I'm thinking, why not? Why not back up into the 1030 area, 1040? Wouldn't be surprised. Copper. We have support holding fairly well. This is the third time it's come down to the low of this little support zone I've got in yellow. And it's not staying there. It's bouncing back fairly well, above previous closes, above previous lows, above yesterday's low. No reversal per se. And I'm not overbought or oversold, so that's about all I've got to go on. Support's holding pretty well. It might be trying to turn up. I really can't tell about copper at the moment, sorry. We've got grain markets. Now, for weeks and weeks, months, I've been talking about a possible major long-term bottom developing in grains and how it shouldn't start to make new lows for the trend. Support levels have got to hold. Markets got to start to make new highs, all that kind of stuff that would be bullish and perpetuating another bull leg. I don't have that. We're now down to this last significant support area, or second to last, and we are oversold. That's a vote for a bounce. It's not started yet. We're sitting right at a previous bear trend line, support. We're sitting at the juncture of a horizontal support level, a bunch of previous lows for the most part. That's constructive, but it hasn't started to move up. It's just sitting here. We did drop off a little bit more, but that's not too bad. So we've got to stay here, and we've got to start rallying, or this thing's going to fall apart. Now, we've already started to do that in a couple of cases. You'll see in a moment. Soybean oil, oversold, around support, not holding very well. We're actually around yesterday's lows right now, near the low of today, which is a little lower than yesterday's lows, and starting to stay a little bit below the support bottom. So that's breaking through it and not coming back up very well at this point. So that does not particularly look bullish, except for support and oversold. But again, I don't like to say it's going to go up unless I have a strong expectation because of other features. This is reasonably good, but it's not starting yet. If perchance I were to get a bullish engulfing today, I would have a green buy signal. And we've got a brand new one toward the end of the YouTube. I'll show you. I think it's cattle. Here we go. Meal. New lows for years. Major long-term support did not hold. It tried to on Friday. It tried to yesterday. And today it just gave up the ghost. We're down a chunk. We made new lows. We washed stops out like crazy. We're sitting right now at the previous lows, which were on December 19th. So we're right on the edge, closing below where we are. You've got new lows and new low closes below previous lows. Usually pretty bearish. Now we are a little oversold, but that would be okay in a down move on a downside breakout. You'll probably get another day or two or more of oversold and new lows. On the other hand, this is a very critical juncture right now, right here. If you started to rally, you would not have a close below previous lows. You'd have a false downside breakout. You'd have a bear trap, and you might even get a reversal out of it if it got strong enough. So this is critically important to watch where the meal closes for me to anticipate what the next several days, if not more than that time-wise, is going to hold for the movement in up or down in meal. Right now, like I said, it's just teetering over the edge. Corn dropped off hugely in the last few days, much faster than I would have expected. Didn't quite get to the support level, but approached it. Got very, very oversold. And I scream bloody murder when I start to see 10 or lower, which I have in corn. I think it's turning around. I've got extreme oversold. I've got close to support, and I've got a huge break in a 4-day period. I think it's turning around. Momentarily, we're already about halfway up in today's range. Stronger it gets, the more I'll like it. We'll see what happens. Wheat has made new lows for years. In fact, this is a new low in wheat since the war began, and that is when wheat had that explosive series of limit up moves way back in late February of 22, with the top of the market being on March 8th of 22, a blow off top, a bearish engulfing, and overbought conditions like crazy, gigantic ER sell signal on the high, historic high day. So this is a new low ever since the beginning of the war. Wheat is not holding up. We've got to turn it around real soon here in order for grain markets to have any kind of a convincing bull move starting, and it's not happening yet. Cattle. There's your bullish engulfing today, right now. As long as we close higher than yesterday's close, I will have a green bullish engulfing buy signal, an ER signal. That one was a really good one back there on November 15th. That was a small profit for a few days on August 26th. Don't have too many buys. The sell signal here was pretty good on February 3rd for a sell signal, and a very nice one on the high day on December 16th sell signal. And this is a little bit of a buy that was okay. So we got 3 buys, a couple of sells, but this is a brand new buy signal in a support area. Oversold conditions just barely, but oversold today at the lows. We're starting to go up. I'm now bullish on cattle. I wouldn't be surprised to see it come all the way back up to, say, 202 to 206 plus. Pretty good rally I'm expecting. What about Miss Piggy? 3rd day oversold, bottom of a support range, bouncing off of it fairly well near the high of the day today, which is where it opened. So it'd be nice if it started to move up more. It could have a bullish engulfing if we got over yesterday's high, which doesn't seem very likely. But The moment you turn your back on these markets, they do exactly what you didn't expect. That's why you've got to have protective stops in, stop loss orders. Every time you make a trade, you should be putting in some sort of protective stop. Limit your losses and let your profits run. Lily Lipper. That's my motto. That's my signature on my emails. And by the way, if you have any questions, info@ersignals.com. And we're back to the E-mini. Reasonable bounce. Making new highs since the morning's low, which was in about an hour after the opening California time, 7:20 instead of 6:30. Yeah, something could be happening, but I'm looking at on the 1 minute chart, pretty overbought conditions. Of course, this is extremely short term, but also back up to some resistance from nighttime lows. 5:30 in the morning, we went down to this level, came up and then broke it. Now we're coming back up to about the same levels, and we're based on 1 minute chart overbought. That doesn't really mean very much except for short-term trades, scalping stuff. You guys have a great day and profitable trading to you.